Okay, let's dig into this. We're doing a deep dive on NVIDIA's latest earnings report and all the commentary around it.
Right.
The idea is to pull out the really key things you, as an investor, probably want to know from the material that was shared.
Exactly. We're sticking just to what was in the report and the management comments. And, the source mentioned that initial market reaction had popped, then sort of settled around 5% up.
Yeah, that initial jump. Okay, so let's get straight to the numbers then. What did the report actually say for Q1?
So Q1 revenue landed at $44.1 billion. That was just a touch above the expectation, which was around $43.5 to $44 billion.
Okay, pretty much on target. And looking forward, Q2.
The guidance for Q2 revenue is $45.0 billion, give or take 2%. Management basically framed that as steady, meeting what people expected.
Got it. Steady guidance. Now, margins, that's often where you see some interesting detail.
Absolutely. So the reported gross margin for Q1 was 61.0%. But, and this is a big but, there was a specific charge they took.
Oh, right, I saw that mentioned.
Yeah, a $4.5 billion charge. If you actually back that out, the adjusted Q1 gross margin jumps to 71.3%.
Wow, that's a huge difference, 71.3.
Mm-hmm. And the report noted that was a bit better than what buyers were looking for, which was maybe around 70.5%.
Okay, so excluding that one-off item, margins were strong. What exactly was that $4.5 billion charge for?
It was specifically for excess H20 inventory and also purchase commitments related to it.
H20. That's
Yeah.
the chip they designed for China under the previous U.S. restrictions,
That's
right?
the one. So inventory tied to that specific situation.
Makes sense. And longer term on margins, what are they aiming for?
They reconfirmed they're working towards getting gross margins into the mid-70% range later this year.
Still aiming high then. Anything else jump out on the financial side, like cash use?
Oh, yeah. A huge share buyback in Q1, $14 billion.
14 billion.
The report really highlighted that it was about 50% of their free cash flow. Basically half the cash the business generated after spending on infrastructure.
That's a lot.
It is. And it was noted as the most they've ever done. For you as an investor, that usually signals, well, strong cash generation, obviously, but also management feeling good about the company's value.
Okay, let's pivot to that H20 situation and China more broadly. It seemed like a big focus in the commentary. What was the deal with H20 sales beyond just the inventory charge?
Right, so they confirmed they actually sold $4.6 billion worth of H20 in Q1.
So they did move quite a bit of it.
They did. But there was another $2.5 billion in H20 orders that they just couldn't get delivered before the window closed for shipping those compliant chips.
Ah, okay. So demand was even higher, but the restrictions cut it off. How does that play into the Q2 outlook you mentioned?
Well, according to the management commentary, the Q2 guidance we talked about, it has an implied roughly $8 billion revenue gap factored in.
$8 billion, just from the H20 supply cutoff.
That's how they framed it. Basically, $8 billion less revenue in Q2 than they might have expected from China H20 sales if things hadn't changed.
That's a pretty significant headwind. And management didn't mince words about the China market overall, based on the report?
No, they didn't. They described it as, one of the world's largest markets, pointing out it has half the world's AI researchers.
Right.
And from their perspective, the current U.S. rules have essentially closed this market to the U.S. industry. They put a number on it around $50 billion.
A $50 billion market effectively closed from their viewpoint. And what did they see as the consequence?
The commentary suggested this kind of policy actually strengthens competitors and weakens the U.S. industry overall. And there was a direct quote mentioned, China AI will develop W or without chips. The implication being they believe China will find other ways to push forward on AI.
So given that view, are they working on new chips for China? Chips that do comply with the current rules?
Well, when asked, they said they are considering models that would comply, but nothing specific to announce right now.
Okay.
They added something like, they trust the president has a plan, so sort of a wait and see on that front.
All right, so definitely some major challenges highlighted around H20 and China, big headwinds presented. But that Q2 guidance is still $45 billion. So what's keeping things humming outside of that? What are the drivers?
Yeah, this is where the report painted a much stronger picture. The Blackwell product line, their next generation seems to be progressing really well.
Yeah.
Rapid deployment was mentioned.
Strong uptake of the new stuff.
Exactly. And management actually called out 4 specific things they described as, like positive surprises or drivers that have popped up just since their big GTC event a couple of months back.
Oh, interesting. What were they?
Okay, first, just explosive growth in reasoning AI and what they call agentic AI. That's driving a lot more inference demand.
Inference, like you're using the trained AI models, not just training them.
Precisely. So models getting deployed and used. Second, geographical expansion. They link this to countries putting policies in place to boost AI, leading to faster rollouts in new places.
Okay, wider adoption.
Third, enterprise AI agents are, quote, starting to take hold.
Yeah.
So businesses are actually starting to use AI internally now. They mentioned their RTX Pro enterprise products supporting this.
Right, the professional workstation side.
And fourth, a return to manufacturing is apparently boosting demand for things like Omniverse and AI, for digital twins and optimizing factories.
That's quite a mix. Inference, geography, enterprise, manufacturing. Seems broad-based. What about that Singapore revenue note? That seemed high.
Yeah, the 20% figure. They did clarify that. Apparently, it's mostly down to how they do centralized invoicing.
So not the actual end customer location?
Mostly not, no. They stress the actual customers, especially for like 99% of the H100 and the new B100 orders, are still largely U.S.-based. So for you, the investor, it's more of a bookkeeping detail than a fundamental shift in where demand is coming from.
Got it. Good clarification. And I think I saw a quick mention of management travel plans.
It's a small note, yeah. They're heading to Europe next week. The report kind of hinted this could be a signal about potential new deals or expansion efforts there.
Worth keeping an eye on, perhaps. Any other business segments getting called out?
Networking continues to be very strong. They mentioned key parts like NVLink, their InfiniBand and Ethernet gear, Spectrum-X, and the Bluefield platforms, all doing well. They specifically noted a couple of big cloud providers are now starting to deploy their Spectrum-X Ethernet for AI networking jobs.
So wrapping this part up, despite the China headwinds described in the report, the underlying story seems to be strong demand elsewhere and good momentum.
That's certainly the picture the report paints. The company's view seems to be that this whole build-out of AI factories, the massive infrastructure needed, it's still really early days.
Right.
And they expect their supply chain is going to be, very busy for the next few years, just keeping up.
So taking all this information from the report, pulling it together for the listener, what's the kind of core message about the company's health and where it's headed right now?
I think what really stands out is you kind of have to separate the two stories. There are the specific described headwinds from the China restrictions, the H20 charge, the guidance impact.
Right.
But then there's the core business performance elsewhere. The adjusted financials show strong profitability, and that huge buyback shows massive cash generation.
And the growth part, what's driving things forward, according to them?
Well, the report really emphasizes that demand for the next-gen products like Blackwell is driving serious growth globally, outside that restricted market. And you combine that with these other trends. They highlighted inference growth, enterprise starting to adopt AI, the manufacturing pickup. Management is basically signaling multiple strong drivers for expansion ahead.
Okay, this deep dive into the report material really gave us a good look at the numbers, the described impact of those geopolitical factors, and also the growth engines management wanted to highlight.
Yeah, it definitely presents a picture of a complex situation. You've got significant reported challenges in one key area,
but offset by described strength and opportunity pretty much everywhere else.
Exactly.
So here's maybe a final thought for you to chew on, drawing directly from the material we just went through. Despite those really significant reported charges and the impact of market restrictions the company described, the report also highlights this really strong underlying demand and very fast next-gen product uptake globally. What does that suggest to you about just the sheer scale and the kind of global nature of this AI infrastructure build-out that management keeps talking about?
It certainly seems to suggest that the fundamental demand engine driving their business, at least based on this report, is incredibly broad and powerful. Powerful enough maybe to absorb pretty significant regional hits and still point towards growth overall.